All right. Good evening, traders. Just wanted to go through some of the stuff that I saw today on the NQ and answer a question that I had personally had for a long, long time. And when I started using a particular indicator, the answers just kind of fell out on the chart. This is from David's trading, my friend David. He's got a trading room. This is basically his chart and some of his signals. This was this morning about 10 o'clock, between 10 and noon, on trading the NQ, the March contract, and you'll see that the basically long signals are in here, long, 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 long. Okay, so we had 5 long signals, but only 2 of them really worked out. Okay, got that one there, which was a nice run. That one there, which is a nice run. This guy went nowhere. Bam. This guy went nowhere. Bam. This guy right here went a little ways and then bam, came back. So why does that happen? Why do sometimes these signals work out and sometimes not? Well, when I ran across an indicator called Murray Math Lines, and once you start researching Murray Math Lines, you're going to be amazed at how much better your trading is going to be when you use them properly. Um, why did that one didn't work out, that one worked out, that one didn't work, that one didn't work, that one worked. Okay, let me pop Murray Math Lines on. I had already stuck it on here down at the bottom. I'd added automatic trend lines, and that was all I added on this chart. Um, I kind of like the automatic trend lines because it tells me basically okay, price action's probably not gonna come down here and break that. Anyway, um, I like these, so I put those on there. I've got a Murray Math line on there. Once I unhide this, watch this, guys. This is amazing. Boom. Okay, this is a 64, the square width of 64. And I'll show you the settings on that guy. 64 square with a look back period of 1.5, which is pretty standard. I changed my rounded tick size to yes. I like that. I like to see the tick sizes rounded off instead of the exact math. Well, gee, there's major pivot. Price action tends to bounce off of major pivot and stall weak reversal lines, and you'll see you'll see pullbacks there, a lot. Either support or sorry, either going long or going short. This particular example is just going long. Okay. Um, so we have the long signal here, but it ran right up against that major support resistance line. Okay, or that major pivot. Sorry, major pivot, and then it pulled back down. Here's your second long. Okay. This one worked out because it was above the major pivot line. Price actions already broke that major pivot line when that long signal came on. Boom, here you go. That long worked out pretty well, all the way up to the stall weak reversal. Okay, and if you wanted to take that short trade, that would be the stall weak reversal is a pretty good way, a pretty good place to get out. If you're just taking that trade from major pivot or from support resistance or from the support line to the stall, because usually again, price action will kind of stall out there and kind of pull back, and that's what you saw here. It pulled back into this range, chopped into what they call, this is the range zone, and it kind of chopped up and down here for for a couple of times. Let's see, down, down. So and then it came down here for the final time and then went above. So it's basically chopping down in the zone about 3 times. So that long worked out. This one did not. Again, you're looking at major pivot. You're looking at stall weak reversal. It's testing these zones here. So it goes up, didn't go anywhere. Went up, didn't go much of anywhere. Just hit again. Again, hit just at the stall. If you were trading that, you could have gotten in and just grabbed, gotten out at the stall weak reversal, because you see it pierced it hit the stall weak reversal. Here it touched the stall weak reversal, challenged that stall weak reversal twice, okay? And then the third time it went ahead and pierced it. It's like, somebody pushing on a door. It's like, Oh, let me see if I can do it. Oh, I didn't get far. I need a little more energy. So pull back a little farther down. Oh, I'm going to try it again. Okay. No, didn't quite make it. Oh, here we go, third time. And you'll see that a lot in the markets. The market likes to do things in threes. So the third time's the charm type of thing, I guess. So third time, bam, went through. Now, Murray Math lines, you'll see here's where it started out. Here's where that move started out, right over there at that reversal line. Okay. What happened? It ultimately went right up to that other reversal line. That would have been an extremely nice trade just to stay in. Murray Math lines will tend to keep you in trend, which is really, really nice. And it will also tell you where your likely pullbacks are going to be. There's a pullback here, pullback up here, pullback up here, and then went up here. Now, what's interesting about this, watch this. Once you clear that support line, okay, you could have gotten into that long right there. You could have gotten into it right there. If you were waiting for David's signal, you would have gotten in and immediately pull back. So right there. So you're taking a little bit of heat going downside unless you came in, right down here for the long. Okay. You trade the signal, you get in, you got a confirmation bar, you get in at the next bar, bam, you're long here. Oh crap, it pulled back. But where did it pull back to? It pulled back down into the support zone, but did not pierce the bottom. It's very important. I see occasionally once it clears the support zero, it'll pull back, but it won't pierce that the bottom of the support zone, or it'll pierce it by one tick. Okay, so putting your stop 1 or 2 ticks below that is a pretty safe thing to do. It doesn't go down and grab your stop very often. See, pull back, and then it just took off to the upside. So what you could have done is you could have traded from reversal up to reversal. You could have traded from top of support, bottom of resistance. You could have traded from or you could have traded from here to that major support resistance line and then back up. My particular style, I would have gotten in at the top of support, taken one contract off at major support resistance. At this point, moved my stop to break even +2, and then traded it up to either resistance or traded it up to the reversal. Especially if I'm seeing a lot of stuff here, a lot of price action here, a lot of movement, a lot of momentum. Just trade right up to reversal. Otherwise, I'll just get out of resistance if I want the conservative move. Anyway, I just wanted to go through this with you guys and kind of show where the Murray Math lines can help you and can indicate areas that the market will often bounce off of, so that you can kind of be ready for that, and you can keep your stop far enough back right down in here to where you're not going to get taken out, even if you take that, say for example, the long and it goes against you. Set it out. If it comes back down here and takes out your stop, well, make it back on the next signal. So, and then some. So anyway, I hope this helped you guys, and I hope it helped the traders in the trading room, in David's trading room, that see this. Anyway, I hope you guys had a fantastic day today. My God, it was a $1,300 day on the NQ. it was at least 13. It was just absolutely an amazing day. So NQ, the ES ran up, and the YM ran up too. All three markets made a huge run. Anyway, I hope you guys made a lot of money today. I hope you traded green, and I hope this video helps you. Till next time, thanks a lot, guys.